It's 10 o'clock. I think we'll get started. Good morning, everybody. My name is Mary Collier. I'm the Professional Development Program Manager at the Ontario Museum Association. And I am very happy to welcome you to COVID-19 Navigating the Crisis Federal Support Programs with our presenters from Young Associates. And we're co-presenting today the Ontario Museum Association and the Ontario Association of Art Galleries.
Hello everyone, my name is Jessica Lucas. I'm the Secretariat Coordinator at the Ontario Association of Art Galleries. I would like to first acknowledge that Toronto, where the OMA and OAAG offices are located, has been a site of human activity for 15,000 years. This land is the territory of the Mississaugas of the Credit, Haudenosaunee, and the Huron-Wendat. Today, Toronto is still the home to many Indigenous people from across Turtle Island, and we're grateful to have the opportunity to work in the community on this territory. A bit about OAAG. We're an art service organization that serves as a voice for over 270 public art galleries, art museums, arts rent centers, and arts organizations. We provide professional development opportunities, advocacy to all levels of government and funders, and network building. We're working currently to advocate for the sector and provide our members with the most up-to-date relevant news and resources to help the public art sector through the COVID crisis with our digital platform, response.oag.org.
So I want to thank everybody for being here today, and I hope you're all well and in good spirits. This is the second webinar in a series that the OMA is doing that we hope will provide some helpful information to get you and your organization through closures and social distancing measures. And I want to start by making sure that everybody knows how to participate. So you'll see the slides, you'll hear the presenters speak. If you'd like to ask a question or make a comment, simply type it into the Q&A box, and you can access that at the bottom of your screen. So my colleague, Christopher Shackleton, is signed in as the Ontario Museum Association, so he'll be helping us moderate today as well. And if you have any questions you can about how things work, you can ask him. We will be monitoring the Q&A throughout the webinar, and we'll do our best to ensure that all of your questions are answered in the Q&A portion following the presentation. But also we are recording the webinar, and the slides will be available after the fact as well. So a little bit about how it's going to work. We're going to do a little bit of an introduction. The webinar is about an hour in length. Then we'll pass it over to our presenters, and then have hopefully about 25 to 30 minutes for Q&A, and then a few little announcements about what's coming up next, and we'll wrap up around 11 a.m.
So I'm very happy to introduce our presenters today from Young Associates. A bit about Young Associates. They specialize in delivering technical expertise and advisory services to nonprofit and charitable organizations. They strive to support operational effectiveness in the areas of finance, data information, HR management, and strategic planning. So today we have two members of the team from Young Associates to help us understand the federal support programs available to galleries and museums. We have Alicia. She is the payroll manager with Young Associates and works with clients across the arts and culture community to maintain accurate and compliant payroll services. As part of ongoing efforts to maintain knowledge of legislation affecting payroll, she has been working tirelessly to keep with the new and emerging programs related to COVID-19. Julia, who we also have today, is a senior associate with Young Associates, working with such clients as the Textile Museum of Canada, Gallery 44, and the Art of Time Ensemble on bookkeeping, financial management, and payroll. She will be supporting today for any questions you may have relating to bookkeeping and financial management side of COVID-19 programs. There's a lot to unpack with this topic today, so we'll get started right away so we have plenty of time to address questions. So Alicia, go ahead and unmute yourself and share your screen to get started.
Thank you, Jessica, and good morning, everyone. I am just putting this up. Okay, so I'm going to jump right in. I have a lot to cover today, so I'm hoping that I keep everybody interested throughout this presentation. So in this time of pandemic, it can often feel like everything is changing by the hour. The government has been making announcements daily and has been introducing and amending programs faster than we have ever seen before. Today, I will cover three such programs. I will start with a quick overview of the Canadian Emergency Response Benefit I will refer to as CERB, followed by an overview of the Canadian Emergency Wage Subsidy, I will refer to as CEWS, and finally, I will share brief information on one of the newer announcements from April 17th in regards to a new emergency benefit for charities and nonprofits that operate in the heritage, cultural, and sports sectors. Let's start with the program that rolled out first, the CERB. The CERB is a federal program for which employees or self-employed individuals that have lost their income due to COVID-19 can receive up to $2,000 a month of taxable income to help support them through these uncertain times. I'm going to run through the eligibility criteria for you and talk about qualifying periods and finish with some important information for employers. Yes, this program is for individuals, but we have some important advice for how you might interact with your staff who are applying for CERB. So who is eligible? An employee or self-employed individual must be residing in Canada, at least 15 years old. They must have stopped working for reasons related to COVID-19. They must have employment and self-employment income of at least $5,000 in 2019 or in the 12 months prior to their application date. And they have not quit their job voluntarily. To qualify for your first claim period, you must have had at least 14 days in a row during the 4-week payment period in which you do not expect to receive more than $1,000 before taxes from employment and self-employment income. When submitting subsequent claims, you cannot earn more than $1,000 in employment and self-employment income for the entire 4-week benefit period. Note, it is unclear right now how the government intends earnings to be reported. There are 2 options. You might count earnings based on when you received the money. This is the normal basis for income tax reporting for individuals. Or you might count earnings based on when you did the work, typically before you receive money. This is the normal basis for business accounting. In terms of how to apply, qualifying individuals can apply for CERB either through the CRA for 4 weeks at a time or through Service Canada for 2 weeks at a time, but should not apply for both. There are 7 qualifying periods shown in this slide. Anyone that qualifies can apply for CERB for a maximum of 16 weeks or 4 periods. There is no indication that these periods must be continuous. Applications can be made as late as October 3rd, 2020. You will notice that these qualifying periods cover 28 weeks. People cannot receive support at this time for more than 16 weeks. Further, as we understand it, people can apply for help retroactively. If someone realizes, for instance, that they have earned $1,000 or less in July, they have until October 3rd to make their claim. As you can imagine, demand is high and the government is swamped. They are trying to smooth the process and reduce everyone's frustration by assigning application days. Applications are made based on your month of birth. I have put up the chart outlining the days to apply or reapply based on your applicant's birth month. I can understand from a management perspective that you want to help employees during this time, but I want to provide a word of caution. You can share facts, but you should not be the one to tell an employee if they do or do not qualify for CERB. Individuals need to be responsible for their own applications. Employees need to follow employment standards for layoffs and issuing records of employment, but we cannot be the ones to advise on eligibility of any of these government programs. Further to the idea of helping employees, we have been approached by different clients who want to help by reducing their employees' hours so that they can qualify for CERB. For many museums, hourly paid front desk staff, for example, have lost their work for reasons related to COVID-19. For many, they would qualify. But what about hourly paid staff in other positions where you may have work for them to do? We caution you against manipulating staff hours for CERB eligibility. We don't know how extensively the CRA might audit this program, and you don't want to be in a situation that could be interpreted as collusion to get funds unfairly. If you are continuing to offer work to staff, make sure you can justify the hours related to your institution's actual needs. Please do advise employees, however, that CERB is taxable income, and because government is not taking any source deductions from CERB payments, it is important employees reserve some CERB funds. We recommend at least 25% to cover the taxes that they could be owed when filing their 2020 tax returns. The last point I want to address with CERB is if someone applies for CERB and is later determined not to qualify, the CRA will require them to pay back the funds received in error. This is a very good reason for you not to advise your staff about eligibility. Again, they must take responsibility for their own application. The next program I want to address in detail is the Canadian Emergency Wage Subsidy, or CEWS. So what is CEWS? The CEWS is a 75% wage subsidy for eligible employers to allow them the ability to retain or rehire employees in hopes that the company will be ready with a trained workforce when the economy gets back up and running. I have a great deal of detailed technical information for you. This program may sound straightforward on the surface, but there's quite a lot of complexity to it. I'm going to tell you about eligibility based on types of organizations and based on calculation reductions in revenue. Then I will talk about eligible compensation and finally how to calculate your claim subsidy. Organizations of any size that meet the revenue reduction criteria can be eligible. We're going to talk through those revenue reduction criteria in a few minutes. The CRA lists a range of types of eligible employers. I'm going to focus on today's audience. Registered charities qualify. That will cover many of you. Nonprofits that lack charitable status also qualify, as do small businesses. Any organization that is a public institution, such as a municipality, local government, publicly funded university, and hospitals, are not eligible for this subsidy. I'm aware that many museums and public galleries are associated with municipalities, universities, police forces, and other public entities. You must be especially cautious of your qualifications for any government program that excludes public entities. Before you apply for CEWS, review your constituting documents or seek additional assistance to determine if you qualify for these subsidies. The revenue qualifying criteria is a reduction in revenue of 15% for March and 30% for subsequent months. At the moment, the program terminates on June 6th. We do not know whether this will be extended. In order to determine if you have a revenue drop of 15 or 30% as applicable, the Souzas allowed revenue comparisons to be done in one of two ways. Method 1 involves comparing the same calendar month from 2019. Method 2 allows the average of January and February to determine if the required 15 or 30% reduction in revenue has occurred. Thus, you would compare the average of January and February 2020 to the months of March, then April, then May 2020. You need to decide what basis of accounting you will need to use, cash or accrual. Under cash accounting, revenue is recognized when it is deposited in the bank. Under accrual accounting, the bank deposits don't count. Rather, the revenue is recognized over the period when you deliver the related service. Let's look at an example. You might have received your 2019-2020 Arts Council grant in a lump sum last July. On the cash basis, that is a July revenue item. On an accrual basis, you would recognize your grant monthly in 12ths throughout the year. You also need to eliminate any revenues from non-arm's length persons. For example, if your institution has its own charitable foundation, which supports you, the transfers from that charitable foundation do not count for this purpose. Finally, charities and nonprofits can choose to either include or exclude government sources of revenue as part of this calculation. The important note is once you've chosen a method, cash or accrual, government grant or no government grant, you must continue to use the same method for the duration of the subsidy. Please note you have some latitude here. We recommend looking at eligibility in multiple ways and to discuss these options with your bookkeeper or auditor or your treasurer and board of directors. You need to think about the options carefully, as once you've chosen a comparison, you need to continue with this method. Again, it is to your advantage to look carefully at the different options, do some calculating, and talk it through with trusted advisors. At the moment, there are 3 eligibility periods that run from March 15th to June 6th. I will leave this on the screen while I discuss entitlement. Qualifying organizations are entitled to receive up to 75% of employees' pre-crisis wages, up to a maximum annual salary of $58,700 or weekly earnings of $847. You may be asking, what if you've given your staff a raise for their dedicated work during this crisis? As long as they are arm's length employees, the organization can claim 75% of the higher amount. Generally speaking, employees in galleries and museum sector are arm's length. The government is trying to control for situations where people can set their own salaries. This would often be the case in the commercial world. If an employee is not arm's length from an organization, they only qualify for subsidy on their pre-crisis wages. This prevents business owners from jacking up their salaries to benefit from the CEWS. The Canada.ca portal to apply for CEWS has opened effective April 27th. However, you want to make sure you have reviewed your qualifications carefully and that you know exactly what you are claiming before you apply. There is no rush. You have until October 2020 to file your claim, and your claim can be retroactively cover earnings back to March 15th. The Prime Minister has confirmed the first payments are expected to be received by organizations with direct deposit on May the 7th. Just to give an idea of how many businesses have been affected by revenue reduction, there were more than 10,000 businesses that applied for the CEWS in the first morning the portal opened. Now let's talk about eligible remuneration. Eligible remuneration consists of salaries, wages, taxable benefits, fees, and commissions. Special payments may be excluded. For instance, you cannot claim CEWS on termination or severance pay. It is the employer's job to ensure that you're claiming CEWS only on eligible earnings. There are some tricks. For instance, the claim periods are 4 weeks long. If an employee has had zero income for 14 consecutive days within a period, you cannot claim CEWS for any of that employee's earnings, even if they worked every possible day for the rest of the period. If you are in a position to schedule staff hours, you need to bear this in mind. It is an important note that you cannot claim CEWS for subsidized positions. This is crystal clear if a position is 100% funded through an employment grant. Claiming CEWS in this case would be double dipping. But what about a matching grant, such as the Young Canada Works? Based on our interpretation, it seems fair to claim CEWS on the employer's matching share. For instance, on a 50-50 matching grant, you would claim 25% of the wages for that employee, bringing the total government subsidy to 25%. This may require some manual calculation outside of the calculation spreadsheet I will talk about later. The important thing to remember with any manual calculation is to ensure you keep detailed records in case of an audit. I should repeat, this is our interpretation. The rules are not completely clear on this. The CRA has provided an Excel spreadsheet to help organizations calculate the amount to claim. In order to utilize this spreadsheet, you will need a list of employees, their pre-crisis wages, and wages that have actually been paid through the qualifying periods. I need to caution you about several things. The first is that every dollar of the subsidy must go to employees' wages. You cannot claim employee remuneration if you have not paid those amounts to employees. If you do discover an error or determine after the fact that you are not eligible, you must repay these amounts to the CRA. There are serious consequences for manipulating your revenue to qualify for CEWS. The government has announced a penalty equal to 25% of the fraudulent claim. In addition, organizations found to have received CEWS funds fraudulently will be required to pay back all subsidy received and the penalty. Finally, every employer will be required to report wage subsidy paid to employees in a special code on their T4. Detailed and accurate records will be very important in order to meet these requirements and in the event of an audit. Before we leave the CEWS, I want to discuss an important feature of the program that may not be aware of. The government recognizes that employees are carrying the costs for salaried employees who literally have no work to do. The point of CEWS is to avoid layoffs and keep Canadian employment base as stable as possible. The program provides a small bonus for employees who retain staff even when there is no work for them to do. CEWS will refund the employer a portion of the EI and CPP for employees that are on leave with pay but are not working. You need to remit these amounts as usual, but you can claim a refund with your CEWS application. There is an additional twist you should know about, and that's the difference between salary, which we all understand, and salary continuance. I'm not going to dive into the definition of salary continuance, but for the purposes of CEWS, it is important to know that you don't owe vacation pay on salary continuance. The Canadian Payroll Association has recommended that earnings for any employee that is being paid or rehired but not working should be recorded as salary continuance. These earnings are still taxable, pensionable, and insurable, but you are not required to accrue vacation on salary continuance. There could also be WCB, WSIB ramifications, but for Ontario, you pay WSIB on individuals on salary continuance until the end of the calendar year. We've just covered an enormous amount of detail. I hope you can take on board a little bit more because I'm going to talk about the interactions between the government subsidy programs. We know there has been some confusion about the 10% wage subsidy, which is available retroactive to March 15th. Any amount claims with the work-share program or 10% wage subsidy will reduce the amount of benefit an employee can receive under the CEWS, but does not negate their eligibility. It's probably to your advantage to grab the 10% wage subsidy right now because it is available now. You must reduce your CEWS claim by the 10% that you have already received. Next, I'm going to talk about the CEWS and the CERB. What is important to remember with the CEWS and the CERB is that either your employee can claim the CERB or you as the employer can claim the CEWS on their remuneration. Both would be double dipping. Obviously, you can't control what your employees do, but you do need to be clear about your responsibilities as an employer. If you choose to rehire furloughed employees and they are receiving CERB, then you need to be clear about what happens next. If an employee has claimed CERB and you then claim CEWS, the employee will be required to return some or all of their CERB payment to CRA. There are still details that are unknown about how the government will administer some of this. The important point is not to double dip. The priority was to get money out to those that needed it best. So the payback requirements will likely be rolled out after we've gotten back to a more normal economic state. Let me end by talking about a few other programs. The federal government has released several programs that are outside the scope of my talk today, but I would like to mention them should they apply to your organization. One such program is the Emergency Support Fund for Culture, Heritage, and Sport Organizations, which will provide $500 million to help address the financial needs of affected organizations within these sectors so they can continue to support artists and athletes. The fund will be administered by Canadian Heritage and will with the support of its partners. We're looking forward to hearing more details about this program, but I have included a link in this presentation to some details in regards to this fund. The Canadian Emergency Business Account, CEBA, provides a temporary interest-free loan of up to $40,000 to help small and medium-sized businesses with payrolls in 2019 of $20,000 to $1.5 million. Charities and nonprofits who have earned revenues, this would apply to galleries and museums, can qualify for this loan. The loan is intended to help with cash flow on non-deferrable expenses such as rent and utilities. Several limitations apply, and should anyone be interested, I have included a link to more information. New programs were introduced in the past couple of weeks for students and rent relief for commercial landlords. While we have very few details and these programs have not been approved by Parliament, they can be of interest to some organizations. And again, I have included some links. I want to thank you all very much for your attention today. Good for you for making it through my extremely detailed and technical presentation. We are all struggling in a constantly changing landscape. And I'd like to give a big shout out to the folks at the CRA and Service Canada. We usually don't appreciate the taxman very much, but they're doing their best to roll out this support to us and are dealing with a vast amount of regulatory details in a very short time. I hope I've given you a better understanding of what's out there by way of assistance. So I want to turn it over now to questions and answers, and Julie and I will do our best to answer any questions you may have.
Wonderful. Excuse me. Thank you, Alicia. That was indeed a lot of information. I want to invite all of the participants, if you have any questions on anything that Alicia mentioned, please do enter them in the Q&A and we'll get started with that. Alicia, if you want to turn on your camera, we can, oh, there you are. Hello. Nice to see you. Get started with the Q&A, and there's Julia as well. Okay, so the first question that we had, I think, came when you were talking about the CEWS. So can you include people who are freelance contractors?
At the moment, no. It is for employment income only. Whether that changes, I don't know, but at the moment it is for employees, not freelancers.
Okay. So I think you may have covered this, but I'll put it out again just in case. So on the CEWS application, it appears that we are supposed to also apply to the 10% wage subsidy, but it also says that you're not entitled to 75% plus 10%. So can you clarify if we're required to claim both or not? It's a little bit unclear on the website.
Sure. So it is unclear. You do not have to claim both. If you have already claimed the 10%, then you're going to include a number in that 10% field. If you have not claimed the 10%, you're going to put 0. And you don't have to claim anything in that field for that wage subsidy.
Okay. So a question about CEWS again. So for CEWS, does municipal operating grants count towards government revenue?
Yes, municipal operating grants count as government revenue. So when you're calculating your revenue to determine eligibility, that goes in with, you can either choose to include all government grants or you can choose to exclude all government grants.
Okay. All right, so another question. So if someone collects CERB, but then the employer says, no, we're not letting you go, we are now going to claim CEWS, how does the employee pay back the money, sooner or later?
At the moment, there isn't a timeline on it. They have released instructions on mailing back a check to the CRA, but as many people don't have checks, I'm assuming there's going to be another payback method at some point, but they have not released details about any sort of further payback method. But if you do have employees that have received CERB and you are going to claim CEWS, I would caution those employees to put that money aside to return to the government.
Okay. Another question from Katie. We have an employee who earns less than $1,000 a month and has told us she is applying for CERB. Can we include her in CEWS?
No. The government is considering that to be double dipping. You cannot include somebody in CEWS and CERB, regardless of how much they're making.
All right. Can one claim CEWS for staff that are being paid 100% of salary but not working full time?
Yes, I think is the answer to that. So my interpretation is you're making your full wages, but you're not working full time anymore. Can you still claim the full amount? Yes, you can claim the amount you were paying that employee, regardless of how many hours they're working or if that hours changed in association with the amount of money they're earning.
Okay, thank you. So would an organization linked to the federal government qualify for CEWS? The federal government is not the employer, but just a provider of grants.
If they are just giving you grants and you receive grants from other organizations as well, then you're not a public entity, so you would still qualify. It's it's organizations that are actually part of. I guess what counts as a public entity at the moment, Alicia, we've got things like universities and colleges, we've got municipalities, hospitals, I believe.
Yep.
Are the sort of organizations that that count as public entities, so that do not qualify for CEWS.
And if you are linked to those entities, then it's a further conversation to confirm your eligibility.
Okay. A question from Katie. She says, if we're applying for both the 10% and CEWS, do we reduce our CEWS period 1 for the 10% of payrolls in the same period or year to date?
I am saying in the same period. I have done my calculations based on the CEWS that I had applied in those pay periods that fall within that period 1.
Sorry, I was muted there for a second. That if there's any more questions, please do enter them in the Q&A. Were there any other points that either of you wanted to clarify at this point? Anything, other questions that have come up for you in your work recently?
So I know there were a couple of questions that were included as part of the registration that I don't think we've covered. I just want to confirm here. One of the questions was, is there a downside to applying for CEWS? And my answer to that is not that I'm aware of. It is taxable income if you're a taxable corporation, but otherwise there doesn't appear to be any sort of downside. The only kind of downside I can see is if you do have quite a few employees that are, say, making less than $1,000 a month. If you apply for CEWS, they are not eligible for CERB in that case, and that might negatively affect your workforce. And they can't quit their job to get CEWS or to get CERB, so that could be the only kind of downside I could see to that.
And another question that was submitted in advance was, how does a nonprofit calculate revenue in terms of calculating the 30% decrease in relation to grants? So you can look at, do you include government grants and recognize them when the check hit your bank? Do you include them and count them divided over 12 months? And then if you're excluding them, again, do you count your foundation grants and, foundation grants and major donations when the check hit your bank? Or do you count them divided over the period of the project that they're meant to support? So it does mean that there's a lot of options to consider, but it also gives you an opportunity to look for a way that you might qualify, because we all need extra support right now. So any of those options are legitimate ways to show the 30% decrease. Government, like including government funding, is probably not going to be the best option for a lot of people. The main thing would be if you got a major project grant the previous year that you're not getting this year. That would be a good opportunity to look at including those grants.
Okay, we actually do have another question that's come in from Dawn. If you had full staffing in period 1 and layoffs in period 2, does everyone have to be rehired in period 3 to apply?
So the answer to that is no. So you can have full staffing in period 1 and claim full staffing. In period 2, you're only going to claim the people that are active and have been paid. And in period 3, again, you're only going to claim employee amounts or salary amounts that you've actually paid to individuals. So if you have someone on layoff and you are not paying them, you are not claiming CEWS on them. Every dollar of the CEWS has to go to employment income. So if you have not paid someone at employment income, then you cannot claim it as CEWS to get the 75%. Kind of to talk about the 3 periods, yes, you will have to apply for each of these periods separately, and they are retroactive applications. So you apply after the period has completed. So you'll know exactly what you've paid people in the period of, in each of the 3 periods.
And there's actually another thing that I think Alicia just briefly addressed, that's actually come up with one of our clients, is the Canada Emergency Business Account, the $40,000 loan. It's available to qualifying companies. Something that we wanted to bring up that was a bit unclear and did come up with one of our companies, one of our clients trying to apply for it, is the wording, unfortunately, from the government is unclear. It says that are any borrowers excluded from this program? And one of the points is the borrower must confirm that it is not a union, charitable, or religious organization or entity owned by such an organization, or if it is a registered T2 or T3010 corporation that generates a portion of its revenue from the sale of goods or services. So we had an organization be declined because it looked like the bank read it just as you cannot be a charitable organization. From our understanding and from other clients of ours who are charities who have successfully applied for this, it's the second part of that sentence that's important. They want you to have some portion of your revenue come from the sale of goods or services. So if you're entirely grant funded, you would not be eligible for the $40,000 business loan. But if you're a charity or a nonprofit and you do have goods and services, then you should be eligible. And if your bank comes back and says that you're not, because you're just on the grounds that you're a charity, it is probably the actual bank manager being unclear about the wording, because it is unclear. So if you're disqualified solely on the grounds that you're a charity or nonprofit, we suggest that you go back to the bank manager and discuss it again, because that on its own should not be grounds for disqualifying you.
All right, thank you for that. We have another sort of clarification question. So it says, to clarify, does CEWS allow for employers to include part-time contract staff? So if contracts ran out at the end of March, but they were renewed and hours have remained the same at 30 hours a week after that.
So I'm going to make the assumption that your part-time contract staff are employees. As long as they are employees, yes, you can claim CEWS on them, whether they're part-time or full-time, even if it's a renewed contract. Even if it's a contract that's run out and you're continuing that contract to pay them, that still counts. As long as they're an employee, you can continue to include them in your CEWS application.
Great, thank you. So we still have the Q&A open if anybody has any other questions. Just another question came up last week in our member meeting that perhaps you could speak to. An organization that is, from what I understand, independent, but their payroll is run through an organization that is disqualified. Those kinds of relationships, does that fully disqualify the museum organization, or are there ways around that?
So the organization itself is a qualifying entity, so it's not a public entity, but they run their payroll through a public entity?
That is my understanding.
That's a good question. I don't know what the answer to that is. I would be inclined to say you would need to check if being linked in that way disqualifies you or not. if you qualify though, your payroll should qualify. So yeah, I can't be 100% clear on the answer to that, but if you qualify, your payroll should qualify. But I would double check, because you are linked in such a way to a non-qualifying organization, it may disqualify you as a new organization, including your payroll.
And if you were trying to qualify, you would want to make sure that you could show that however much the non-qualifying organization is paying out for your payroll, you are paying to them. You want, like, they can't be paying your employee, like covering the expense of your employees and you claiming CEWS. But if you could, I mean, you still may not qualify. I think Alicia's correct. But if you were trying, if you did determine that it didn't rule you out entirely and you were trying to qualify, yeah, you'd want to be able to show that the expense of paying those employees was yours.
Yeah, it would also depend if that is considered a subsidized position or not. If you're saying the university is covering that payroll, and you're not giving money for those positions to that university to pay these people, then I would say that falls under subsidized position and would not be covered.
Okay, thank you. It looks like we have another question in the chat. If one applies and gets the CEBA loan and winds up not having to use it, i.e. sticks it in the bank, repays, keeps the 10 million? I'm not sure. Would they be penalized?
10,000. So that isn't clear at the moment what they're going to do for organizations that have taken the CEBA and end up not needing it. So at the moment, it seems like, no, there's not going to be any sort of penalty for taking it and not using it. However, it could change. And my thinking on this matter is that it might turn into a case where you need to pay back the full $40,000. That you won't be entitled to keep that 10,000 because you didn't use it and you didn't need it. But there isn't specifications on whether that will be the case or not. This is speculation on my part.
Yeah, it's unclear because it says, are there any restrictions on how I can use these funds? Just from the CRA's website. The funds from this loan shall only be used to pay non-deferrable operating expenses, including payroll, rent, utilities, insurance, property tax, may not be used for refinancing, dividends, and increases in management compensation. So I think what's excluded is pretty clear, but what's included is, we've talked about as a staff and didn't come up with a clearer answer to, because we feel like in using the funds to restart your programming activities should be a valid use of them because it's continuing your business operation and it's restarting your revenue generation, but it's unclear.
So we have a bit of a follow-up question for that. Is the loan considered income for the purpose of CEWS?
No, it is not income. It is not revenue. It is a loan.
And you would not count the non-repayable portion as income until the other $30,000 was paid off.
Correct.
Okay. So a question from Dale. So we're a historical society that owns and operates a museum, but the employees are all museum employees. The Historical Society is the charitable organization, but the museum's accounts are separate for the purpose of receiving government grants. Does the Historical Society's revenues and expenses have to be included with the museums, or can the claim use only the revenues and expenses of the museum? So the museum's budget is 10 times that of the Historical Society.
That's a very good question. I'm just rereading it in the chat here. Museums accounts is separate. Museums claim. Is the museum a separate corporation? I think is the question. Because if it's a separate corporation, then the museum would not include the Historical Society's contributions. I think this would also come into the, this might also apply to the grounds, Alicia, with non-arm's length entities, because in which case they would, again, not count the Historical Society's
correct
revenue or contributions.
Yes, if the Historical Society is considered an arm's length organization, you do not need to include the Historical Society's contributions in the museum's revenue.
Okay, excuse me, a question from Sharon. She says, we've applied for period 1 CEWS. On April 20th, our board approved 2020 salary increases retroactive to January 1st, 2020. Do you know if we can apply for an amendment to the salaries in period 1 when those retroactive increases have been paid? They will be paid at the end of April.
I can say that you will be able to claim them going forward into your next application. So on April 20th, the board approved increases. Why wasn't that included in the application on the 27th? That would be my only question. I don't know if you'll be able to go back and amend your application for more money. There's no clarity on what you do if you've put a smaller amount in. There's clarity on paying it back if you've put in too much money or an incorrect amount. But there's no avenue right now to claim additional amounts. You may just be out of luck on that one, especially with the timing of it. The government may just say, you know, you should have had that in there already.
Alicia, if people were to receive retro pay for some other reason in period 2, like it was earned in period 1, but they received it as retro pay in period 2, they claim that as an amount in
period 2. Yeah.
If it doesn't go, I guess, but it would still have to not go over the per person per week limit.
Yeah, so you'd still only be able to claim $847 maximum, even if it was a retroactive payment. So I suppose that does answer the question a little bit too, is that if your retroactive payments are going out to people in period 2, you can claim it in period 2, but only to the maximum amount. We were too eager to apply. Yeah, that sounds about right.
Another question. So she says, apologies if this has been answered already. Are the CEWS periods cash or accrual?
That is a good question. So I'm assuming you mean in reporting the payroll amounts. I have seen it both ways. I have seen it that you do it based on when what the pay period falls under. However, some of the payroll providers like Payment Evolution, WagePoint, Ceridian, those have come out with calculations based on pay dates. So at the moment, we are running under the assumption of pay dates, and that even your weekly calculation should be done based on your pay dates that fall in that January 1st to March 15th period.
So we have another question about the loan. So if you have an emergency reserve fund, can you still apply for the loan, or do you have to use up that fund first?
So again, this is unclear. There is no specific CRA guidance on this. It is, we feel like it's not a reasonable requirement for organizations to have to bring themselves to the verge of bankruptcy before they can get this loan, because that's not a position to carry forward from. But we don't have any specific guidance from the CRA on that.
The bank may disqualify you based on that, but it would probably be an institution to institution kind of ruling in that case.
Okay, we have a few more minutes if anybody has any final questions before we sign off. Alicia or Julia, did either of you have any final points that you wanted to make before we wrap up?
I feel like I've talked a lot.
Fair enough. Okay. Well, in that case, I want to say a big thank you to both of you for being with us today, for providing some good guidance and information on this, and for answering some questions on the fly. So I am just going to share my screen again, just for some final announcements. Yes, I want to thank Alicia and Julia for being here. I want to thank Young Associates for making them available, and I want to thank everybody who signed in today and shared your questions and comments. That was, I think, really useful for everybody to hear from each other. And as I mentioned earlier, we have been recording this webinar. We'll be making it available after the fact if you want to review it or share it with your colleagues. We can also share the slides as well. So I wanted to make a quick announcement about what's happening next Tuesday in our series. We have a webinar called Collecting Community Responses to COVID-19. So in this webinar, we're going to hear from an archivist, a collections manager, and a curator about some of the different approaches to documenting and planning for collecting during the COVID-19 pandemic. So registration for this webinar is open right now. You can find that on the calendar of the OMA website. I'll pass it over to Jessica now for a moment. Oh, no, that's me, sorry. We are also doing the OMA's next Museums Connect On member check-in tomorrow morning at 10 a.m. So please do join us for that. It's a chance to get a bit of an update from the OMA and then have kind of an informal discussion about the things that are on your minds. And so you can find the registration for link for that in our on the OMA's website on our calendar as well. And also starting next week, OAAG is going to be hosting Member Monday check-ins. So these virtual discussions will bring OAAG members together to discuss current issues that we're all facing in the sector and to check in with other OAG members about navigating the current COVID-19 crisis. So OAG will be announcing how to register for those and the date and time in the coming weeks. So keep your eyes open for that.
So as you know, this webinar was offered free of charge as a service to the community during what's a very challenging time for everyone as organizations and individuals. If you're able, there are some things that you can do to help support OAG and the OMA to continue to provide timely and accessible resources. If you're already a member, thank you. Please renew your membership when you receive an email reminder. If you're not a member, please consider becoming one, either as an institution or as an individual. You can find information about member categories and benefits on both of our websites, or consider making a donation to the OMA or OAAG, which you can also do through both of our websites. Your support of our associations and your participations in events like this webinar make us stronger as a sector, and we appreciate each and every one of you, so thank you. This slide shows the OAAG COVID-19 response website. It's response.oag.org, which is where you can find the most up-to-date relevant news and resources to help the public arts sector through the current COVID crisis. The slide up now is the OMA's homepage, where you can click on COVID-19 resources to access their dedicated webpage, which is updated regularly with new resources for museums as they become available. Just a heads up, when you do leave the webinar, you will be directed to a very short 3-question evaluation form. Please take a few minutes to let us know how you did today and what you would like to see more of. And we have ways to stay in touch currently on screen, please do. And thanks again, everyone, for joining us today, and for Young Associates and OMA and everyone. So hope you all have a really great day. Yeah, Mary, am I missing anything?
Nope, that's it. Thanks,
Okay.
everyone. Have a great day.
Have a great day. Bye.